Hi, welcome to Market in a Minute. I'm Patrick Adams. Did you catch the Belmont Stakes on Saturday? Golden Tempo comes from last to first again. Incredible horse, right? Oh, the French Open. Did you see any of that? So the important part of that was a lot of the younger players are wearing the On Holdings tennis gear and shoes, by the way. We think On Holdings is going to be the next great apparel company. We like this one a lot, ON. And obviously, they're creating a cult following at this point. But we really like that company. And I was kind of impressed with your outfits as well. So we're going to give analysis on SpaceX, really focused on how to trade this, what's going to happen with this stock. This is our best analysis that we can put forward on this. Okay, Trump needs to get the Iran deal done, or a major correction is coming. Come on, dude, get this wrapped up. I mean, this is becoming a real problem for the market. The market's getting very narrow. Momentum's all driven into the technology stocks, and it's not going anywhere else, which is causing a problem. We saw that big time on Friday with the market pulling back so strongly. Disclosures, please read that at your convenience. It's important that you do. SpaceX IPO. Okay, the IPO is expected to be on Friday. Price is expected to be $135, raising 75 billion, and the total market cap, okay, is 1.75 trillion roughly. So they're not raising anywhere near the total market cap. There's probably a good reason for it, but the market cap is going to be huge, and this is the main issue with this investment over time as those private shares become public. Now the revenues is approximately on a trailing 12 months basis $19 billion. So it's coming public at almost 91 times revenues. Okay, that's really high. I can't tell you how high that is. Starlink is 12.2 billion. Space is just under 4 billion, and then the AI, that's X. AI computing is roughly 3.3 billion. They lose just under $5 billion a year. Revenues in 10 years. This is our best guess at this. Okay, we think that the Starlink could be roughly 400 billion. Now keep in mind, we got our rose-colored glasses on when we did this analysis. We really wanted to see what the potential was. Verizon's at roughly 138 billion, and they've been around basically forever, right? Very long time. Now, to get to 400 billion, this thing's going to have to grow a lot. The space division, 380 billion is what we're expecting over 10 years. Kind of think it's all going to be back end loaded, a lot of it back end loaded. As space, grows over time, maybe it accelerates the growth in those latter years of that 10-year view. It, as I mentioned, 3.8 billion currently growing to 380 billion. That's a 100-fold increase, right? X, we really gave him some leniency here too as well. I think it could grow 25% a year. If you look at the track record of X recently, it's not been growing much. So in 10 years to get to 31 billion, that's given them the benefit of the doubt. So total revenues to be over $800 billion when I look out 10 years. So how do you find a valuation for this company, right? Tesla is really the only way to value it. It's the only one that gives the Elon, sentiment to it. The Elon multiple is Tesla. And Tesla's been a beautiful stock over a long period of time. Last 5 years, it's been average. It's grown. It's up about 104% in 10 years. So, in 5 years. So not a bad stock, but nothing remarkable. And so we think that using the current multiple of revenues for Tesla at 14 times revenues is probably appropriate. Looking 10 years out at roughly 11 point, looking 10 years out at roughly $811 billion gives us $11.4 trillion valuation. Okay, so there's a lot of high expectations built in that. If you take that 11.35 trillion, discount it back by 25% a year, you could argue maybe that 25% is high, but we don't think so. Discount by 25% back for 10 years, you get a valuation of roughly 1.2 trillion. So the 1.75 trillion compared to 1.2 trillion, okay, the stock may be on the high side of where it should be brought public with very high valuations. So you can play around with these sort of inputs yourself and come up with your own sort of valuation, but we think we're reasonably correct on this. So we think in 15 trading days, the Nasdaq's going to add it to Nasdaq 100. We'll add it to the index. So we're expecting roughly about $21 billion in purchasing just from going into that index. So it's about 30% of the offering. So the stock should do fairly well based on that alone. You probably have a limited amount of supply that's going to come out of it. All the lockup money will come out later. So the lockup shares are going to be huge. This is going to be a big problem for SpaceX over time. Elon's locked up, right? He's locked up for a year, but over 180 days, you're going to have a lot of stock come to the markets. And then the first 20%, so 350 billion roughly, will be on the second quarter earnings reports. And then you're going to have more on the third quarter earnings reports. So just keep in mind, as you go through the year, basically towards the end of the year, you're going to have a lot of the float come to the overall markets. So what we expect to happen is we expect the stock to trade fairly well. I think it's going to trade up. The market really needs this to work out and needs it in a big way. But we think it's capped by this, up 30%, and then it starts to unlock more and more money. So as you unlock that, above 30%, you unlock 10% of the stock, and then as it stays above there, you unlock more and more of those private shares. I tell you what, if I owned the private shares, you know what I'd do? I'd sell them right away. I would sell them right away. I kind of think you'll be able to buy this stock back at a lower level, but I'd sell them right away and take my gain. Obviously, a lot of the private guys have big gains, so I'm not an unusual person. Those private guys are going to sell it. They're going to lock in that nice gain. So if you have a 10-year view, okay, you're going to get about, off of our estimates, about a 550% return. That's not bad. So buying it and holding it, you're going to get a really good return over time. In the short term, I think you're going to see volatility like you see in Tesla shares. You're going to see a nice pop to it, and you're probably going to see a nice big pullback and potentially sell below the offering price. Then you're going to see this sort of movements again. You're going to see it go up on news and events and the Elon hype that comes along with what he does. He's a genius at it. So what to do with it? If I bought on the IPO, I would look to take some profits at some point in time before all the stock hits, and if I was not inclined to trade it, hold on to it. You got a shot at making some really good money. Probably worst case over 10 years, you're going to be flat in it. But if everything goes well, 550% returns, not bad. Market update. Okay, the market is stuck in this momentum trade, and on Friday we saw some evidence that it's not liking it, right? So the momentum trade is because of the impact of oil prices. What's the impact it's having on consumers? Okay, it's slowing things down. I think you got most of the people in the economy, they're reasonably okay, but you got an element of the economy that's really starting to struggle. They're starting to struggle on making their mortgage payments. We're seeing it locally here. So I think that what the stock market needs to be able to rotate is we need to resolve what's happening with the Iran war. Trump needs to get this resolved. Get it over with, one way or the other. You're being a little bit duped here with dragging out this negotiation. If it takes this long, it's not working out. So inflation is working its way through the economy. It's becoming a more permanent thing. So we had high inflation, so we're getting higher inflation on top of the previous buildup, the cumulative impact of inflation. That's making things completely unaffordable. So if this continues to last, you're going to see that inflation that's currently starting to filter its way through the economy to be more of a permanent thing. So what's coming up is Walsh is going to have his first meeting, and I think he's going to make the point that inflation, when you look at it cumulatively, when you look at all the inflation and you take the median price, it's not going up a whole lot. That may be the case, but the market's not convinced of that. So again, we're wasting our time on Iran. It needs to get resolved to get the monkey off the back of the economy and the stock market. And then Walsh can make a really strong case that inflation's coming down and let's cut rates. I think that's really doable. But right now it's causing a problem. So the stock market needs to rotate, or we're going to have one hell of a correction. So this needs to get resolved. Last Friday, okay, so I think this is an early morning shot. Last Friday, the S&P fell 2.63% that day. The NASDAQ fell 4.2%, and then the technology ETF fell 6.66%. Is that kind of a signal? 6.66, it fell. The S&P 500 broke a 20-day moving average. Now we don't think breaking the 20-day moving average is a big a big signal to the overall markets technically, but I think because it's so much above the 200-day, it's important. So we got to roughly 10-12% above the 200-day moving average. Breaking the 20-day off of this huge run is an important factor. Now we generally like the 50-day moving average, and we're still away from that, but we like the 50-day moving average as a strong sell indicator. Now, what happened back in that April period, March, April, and we got bullish, right? We got really bullish. We got a big oversold condition, and then we bounced back above the 200-day, and now is a clear buy signal. So we're not on a buy signal. We are at some sort of signal says to be cautious, or if you want to hold them, you can hold them for longer term, but right now to be cautious. The tactical moves. So what we did last week is we cleaned out the portfolio to a great degree. We sold the remaining of our semiconductor stocks, and they were beautiful. We weren't nearly as invested as what's the market weighting. And then, as I mentioned last week, the market weighting in technology being in related being 50%. That's way too high. There's too many people on one side of the boat. The boat needs to rotate to the other side, or the whole thing is going to tip over. So what we did last week is we increased our hedges. So we're down to about 50% invested in most of our tactical or loss-averse portfolios. The expectations for tech, they're really high. They're reflected in those valuations. And people say, oh, what about the memory stocks? Well, memory stocks are commodity stocks. So you want to sell a commodity stocks when the valuations are really low and buy them when the valuations are really high. It's like a chemical company. So I'm not buying into the memory stocks. And we're seeing that there's clearly signs that there's going to be more and more capacity coming into that sector to take advantage of those very high prices. Now this is interesting. Google, we like Google a lot, right? We think that they're the best positioned tech company out there by far. Okay, they just completed roughly an $85 billion secondary offering. Okay, this is bigger than what SpaceX is doing. $85 billion at $355. Okay, the light's going off on the other technology companies out there they're saying, well, if Google's doing it, we got to do it too. We got to be able to compete. So I think we're going to see more and more of these companies do secondary offerings. Can't say it's a good deal, right? This is not something we want to see. So Google stock took it fairly well. It's roughly $361 today. So it's above the $355 price, but they're doing an ATM, so at the market offering of another another $40 billion, and that's coming in the third quarter. Okay, so we got more stock coming. I think that the Google stock really needs to hold that $350 level. Otherwise, it's really bad for the stock and it's bad for the stock market. You can see that down here. This is where we got our initial buy signal, most recent buy signal back last year. It was around 100, I forget exactly, $140, $160 a share. Broke above the 60, broke above the 200-day moving average at 160, and everybody was really negative on it. Now everybody's really positive on it, and they're selling stocks. You know, the ducks are quacking, and the ducks are getting fed. So just keep that in mind. It's got to hold this level right here. So we're going through our portfolio, making sure everything that we have in a portfolio we like a lot. If it's a company that's not performing and we don't like it a tremendous amount, we're getting rid of it. If it's stocks that done really well, we can't justify the valuations, we're getting rid of it. So we're creating a really nice portfolio again. We're prepared for a decline in the overall markets. We still have a lot of exposure, you know, but we're getting prepared for a decline in the overall markets. SpaceX needs to work, and then as we go through the year, there's going to be more IPOs, more secondary offerings. That's going to suck a lot of the liquidity out of the markets. And Trump, you really need to resolve this Iran problems. Otherwise, this market's going to have a really big pullback. So if you have any questions, please ping me at my website, Patrick Adams CFA. Come to PVG Asset Management. You can see what we're doing over there. We are managers that manage risk. We love making money, but we really hate losing money. So that's why we're getting out of stocks maybe a little bit early at times, because we hate losing money. We like to bank some of our gains as much as we can, but make our clients really good money over the long term, over a cycle. As the market breaks, you're going to see our returns really pop out. This thing really comes down. We're going to have pretty extraordinary returns as we protect our portfolios. So I think it's a good time to be thinking about protecting your portfolio. Take care.